Route planning is always tricky. For investors, charting a path through the busy roadworks of the UK economy in 2020 can be especially hard, so markets are quick to pounce on any data that might provide a turning signal for the future.That's why figures released earlier this month by the Society of Motor Manufacturers and Traders, SMMT, which showed that new car registrations in the UK fell 2.4% to 2.3 meters units last year, attracted so much attention. Mike Hawes, chief executive of the SMMT, warns that the decline is a significant concern for the auto industry and the wider economy. Political and economic uncertainty and confusing messages on clean air zones have taken their toll on buyer confidence, with demand for new cars at a 6-year low. He adds, "So what's the outlook for the auto industry? Our current forecast sees the market falling a further 3.5% during 2020, which reflects the ongoing uncertainties that the market faces," says Ian Fletcher, principal analyst of automotive at IHS Markit. Beyond that is still obviously a bit more of an unknown and will partly depend on what this year brings in terms of negotiations with the EU on a new trading relationship. Our current assessment is that a recovery will start to take shape during 2021 on the back of a free trade arrangement for goods and access to the single market for some UK services based on equivalence. We also currently see the market continuing to grow, but at a far slower pace than that seen during the previous decade. Clearly, the recent data is a negative sign for the car industry. The sector generated £82 billion of turnover in 2018, and supports over 800,000 jobs, so falling sales are bad for business. But what about its implication for the wider UK economy? Car registration figures have traditionally been seen as a bellwether for the country's economic health. Other than a property, a vehicle is likely to be the biggest purchase a family will make in a given year. Being able to afford to buy a car outright or commit to a financing plan is seen as a sign of consumers' confidence in their earnings or financial security. Declining car registrations have therefore historically signaled a lack of confidence. But does this analysis hold up today? Not necessarily. If falling car sales are supposed to indicate a lack of consumers' financial clout, that doesn't marry up with the fact that UK wages have been growing steadily in recent years. Since the end of 2014, wage growth has been mainly positive, with a good run in 2018 and 2019, just as new car registrations have been falling away, notes Alistair Winter, economic advisor at Global Alliance Partners. This points to other forces at work. These forces include changes in the last few years to the way that diesel vehicles and company cars are taxed, which has reduced demand for them. The sales of new diesel cars in particular. For more on this story, visit the news article link.